Okay, let's set the scene. It's early 2026, and a conflict that started in one region suddenly explodes, sending a massive shockwave through the entire global economy. This isn't just a news headline. It's a crisis with consequences for all of us. So, let's unpack exactly how this happened and why it put the world's economy right on the brink.
And look, that's not just hyperbole. When an organization like the International Energy Agency, the IEA, uses language this strong, you know we're talking about something truly historic. This one quote really sets the stage for the sheer scale of the crisis we're about to dive into.
So to really get our heads around the massive economic fallout, we have to go back to the beginning. We need to see the chain of events that lit the fuse. So how on earth did we get here?
Well, it all happened incredibly fast. It kicked off on February 28th with joint U.S.-Israeli airstrikes. Just a couple of days later, you can see the markets were already in a panic and oil prices were jumping. But the real game changer? That came on March 4th. That's when Iran shut down the Strait of Hormuz. And look at the result just a week later. A mind-boggling loss of over 10 million barrels of oil per day. It was like the world's main oil tap was just turned off.
And that single act, closing that strait, is the absolute heart of this whole crisis. It's what took a regional military fight and blew it up into a global economic emergency. It created a chokehold on the world's energy.
To put that in perspective, just look at this number, 20%. That's the share of the entire world's oil supply that has to pass through the Strait of Hormuz. So when it closes, a fifth of the global oil market just vanishes. Poof, overnight.
And the result of that? Well, it was immediate and it was predictable. The price for a barrel of Brent crude, which is the benchmark for the whole world, just shot past $120. You know, a price spike like that hadn't been seen in years, and it sent tremors through every single part of the economy.
And this chart really just paints the picture perfectly. You can see that dramatic nosedive in production. We're talking about countries like Saudi Arabia, the UAE, Kuwait, Iraq. They are central to the world's energy supply, and their exports were basically stranded. So this wasn't just about price anymore. It was a physical crisis of supply.
So, with the energy crisis now in full swing, the effect started to ripple out, like a stone thrown into a pond, putting just immense pressure on the entire global economy. Let's take a look at how that actually played out.
The ripple effect was pretty much immediate, and it was everywhere. You had Europe, which was already in a tough spot, suddenly facing a second energy crisis, with its gas reserves at dangerously low levels. This shock fueled what economists call cost-push inflation. It just means it costs more to make and ship everything. And that pushed UK inflation over 5%. But it didn't stop there. Higher energy costs hit fertilizer production, which put the global food supply at risk. The airline industry was basically paralyzed. And what did the central banks do? They had to slam the brakes on any plans to cut interest rates because they were terrified this inflation was going to stick around.
And this whole perfect storm of problems has economists using a word that honestly sends a shiver down their spines: stagflation. It's that toxic, awful mix of high inflation but with no economic growth. And now you have huge institutions like the European Central Bank openly warning that this is the biggest threat we're facing.
So with the real-world economy under siege, how did the financial markets, which, run on confidence and stability, how did they react to this completely unprecedented level of uncertainty?
Well, the initial reaction was, in a word, fear. Just pure fear. Global stocks took a nosedive, and the VIX, which they call Wall Street's fear gauge, it spiked to its highest level in months. It was a crystal-clear signal that investors were extremely anxious about what was coming next.
But here's where it gets really interesting. If you look below the surface of the headlines, this chart tells a fascinating story. It wasn't like everything was selling off. The market was actually deeply divided. I mean, as you'd expect, the energy sector just soared, up over 40%, while other sectors like tech really lagged behind. This shows there was a huge rotation happening, with investors just scrambling to figure out where to put their money.
And that's a crucial point here, because there were really two competing stories. The headlines were all screaming fear, volatility, decline, but the analysts, they were pointing to the fundamentals, which were, believe it or not, still surprisingly strong. You still had corporate earnings growing at a double-digit pace, and diversification in people's portfolios was actually working. So, all of this brings us to the final, and maybe the most critical question. In a moment of such profound chaos and uncertainty, what are the experts telling investors to actually do to navigate this storm?
This quote right here really nails the core message. Financial experts are reminding everybody that, hey, volatility isn't something new. It's a totally normal feature of markets. And history shows us time and time again that it's discipline and a long-term view that get rewarded, not panicked, short-term reactions. And this chart is the proof. Just look at the data. The market has big pullbacks pretty much every single year, on average, about 15%. But even with those drops, in more than 2/3 of those years, it still finishes with a positive return. This kind of historical context is just so important for keeping these short-term shocks in the right perspective.
But this story isn't over. Right in the middle of all this economic pain, a completely new variable has just entered the picture, a potential glimmer of diplomacy. With Iran's president putting out an open letter and the US president about to speak, there's this feeling that the situation is still incredibly fluid. The path forward is not set in stone.
And that leaves us with this final, really powerful question. This whole crisis has exposed some deep, deep vulnerabilities in our global systems. So as the world stands at this crossroads, the biggest unknown isn't just about recovery. It's about the lasting changes this shock is going to leave on our economy for many years to come. What will it become?